Good afternoon, everyone. Thank you all for taking out time to attend this webinar with the management team of Coronation Infrastructure Fund, a fund which is managed by Coronation Asset Management Limited. My name is Taiwo Olatunji. I am the Group Head for Investment Banking at Coronation Merchant Bank, and it is my pleasure to anchor this webinar on how investors can capitalize on an investment opportunity that will help them against inflation in Nigeria. A brief introduction of the Infrastructure Fund. It's a 200 billion fund that was established in September 2023 and registered with the Securities and Exchange Commission. It is a closed-end investment scheme. The fund's primary objective is to address the long-term funding deficit in Nigeria. And as we all know that Nigeria had a long infrastructure deficit. So our job here is to try to bridge that gap. Consequently, the fund is looking to invest in brownfield and greenfield projects and long-lived assets with highly predictable and resilient cash flows. The framework which we'll be doing this is called the Trust Framework, where we'll be investing in telecoms, real estate, utilities, social infrastructure, transport, and energy. On this call, you have the CEO of the fund manager, which is Coronation Asset Management, and you also have the issuing houses, which are FCMB Capital Market and Stanbic IBTC Capital Limited. During this webinar, we'll give you an overview of Coronation Asset Management, a macro review of Nigeria and our infrastructure positioning, why you should invest in the infrastructure fund, which is the primary reason why we're here. And finally, there'll be a question and answer session where we will address all the key questions you would have with respect to this investment opportunity. Please note that you can drop your questions as we are speaking in the chat box during the presentation, and we would address that during the Q&A session. Without wasting any more time, I would like to introduce to you Mr. Aigbo Biose Imokwede, who is the CEO of Coronation Asset Management. He will take us through a brief overview of Coronation Asset Management, and subsequently after, we would bring on the infrastructure head for Coronation Infrastructure Fund, Dele Akinjo. Over to you, Aig. We can't hear you.
Sorry, thank you. I like your humility when you mentioned the issuing houses, our partners, Stanbic and FCMB, and refused to mention yourselves, Coronation Merchant Bank. So I will do that for you. Thank you. Coronation Asset Management is a member of Coronation Group Limited, which is a capital market holding company. We like to see ourselves as your leading financial services partner, helping to build enduring legacies that lead to sustainable wealth creation in Africa through lending, investing, and insuring. Well, that said, so clearly we have interests in banking, insurance, asset management, stock brokerage, registrar services, supply chain, financing and venture building, trusteeship, and alternative investments through our several verticals within the group. And we cover Nigeria and Ghana. So this leads to why you would then understand why naturally we are going to come up with interesting products and services that will truly lead to enduring legacies for Africa. Coronation Asset Management was registered in 2016 with the Securities and Exchange Commission as a portfolio and fund manager, and as a corporate investment advisor. What do? We do the regular bread and butter, portfolio management, mutual funds, research, and advisory. Now, after we got licensed in 2016, we launched our first 3 public funds in 2017, the Money Market Fund, the Balance Fund, and Fixed Income Fund. We also launched the Credit Opportunity Fund, which is a very interesting product that we've run for about 7 years now. And you can say that we use this to cut our teeth across what we're doing now as a prelim to cut our teeth for the infrastructure fund. Credit Opportunities Fund is a private fund that offers solutions to parties in both Naira and US dollar transactions. We also, at that time, in 2019, we entered a partnership with Cardano Netherlands, where they helped us review and develop our processes across risk management, technology, operations, and investment management, as we set out to be what we are going to be in the investment space. We've won a few awards as we've gone along, including 2020 Global Banking Finance Award for fastest growing fund manager. We also in 2020 launched the Coronation Fixed Income Dollar Fund, which is a private fund. 2021 we won further awards across. From the business, they won the Asset Manager Award, and we also won the Investment Research House Award. We've got an Augusto rating for the investment manager from 2021 of A- for investment management, and we are one of the only asset managers to actually also rate our fixed income fund as well as the money market fund. We've been coming up with a few products that we brought up over the years, and we've been seeing AUM growth year on year of 42%, which has led to us again in 2023 receiving an award from the International Finance Awards for fastest growing asset management company in asset management firm in Nigeria. In 2023 is when we also transitioned into a subsidiary of the corporate of Coronation Group, the capital market holding company, and it's seen us reap the rewards that come with the cohesion that comes from being under the capital markets company. So Coronation Merchant Bank has as its chairman Igboje Agimokwede. We also have very notable and strong corporate governance from our board with Ernest Abi, Chioma Okigbo, Adesu Okumbo Rhodes, and Ahovi Ponu. These are all people who have cut their teeth and continue to cut their teeth across investment management, across corporate governance, and across the financial market industries. I think that I've said enough. Maybe I should just bring, they've hinted me that I should bring on the meat as to why we're here. So maybe I should just invite Dele to come in and join us. Thank you.
Thank you very much, Ike. Dele, over to you.
Indeed, Ike, you've done more than good justice to. I can hear myself.
Dele, we can hear you. Go ahead.
Okay, sorry, just checking because I can hear myself. Done very good justice. Once again, thank you very much to our prospective investors who have registered and joined us. Indeed, we're hoping that this would be, if we haven't done business with you, the beginning of business between us. And rightly before I get into the presentation, is just to also highlight, like I mentioned, that there are a number of products that we currently manage, funds that we manage within our asset management business that can be of interest to you beyond the infrastructure fund. Thank you. I particularly like the theme of this webinar, capitalize on inflation resilient investment prospects. I think now more than ever, we have seen in our country over the last 1 year or 6 months, what inflation really means and how it can significantly erode value. For any investor, whether you're savvy or not, you understand that your 1,000 naira last year no longer means 1,000 naira today. A significant portion of it has been lost. Headline inflation today is
but coming up, finished. So someone came in, that's why I looked up like that first.
We can hear your voice, please. Can you mute yourself?
Okay, all right. Thanks, Taiwo. Headline inflation today is about 30-something%. Food inflation is probably around 35%. What essentially that means is that over the last 1 year, gradually you've seen up to 30% erosion in store value.
Dele, if you don't mind, could you speak up a bit? We need some oomph behind that voice. We're talking
Okay.
about infrastructure, so it needs to be
There's some background. Okay. Can you hear me very well now?
better.
Okay, great. So for us at Coronation, we continually think about how we can help our clients, our customers, how we can help you beat inflation, how we can help you preserve value. And on the prospect of that, on the basis of that, we decided to launch the Infrastructure Fund. Now, the idea behind the Infrastructure Fund really is two things. One is that we're able to create an attractive alternative investment class for investors who are looking to preserve value over a long period of time, who are willing to store value and outperform inflation. And then more importantly, is to do something that's actually bigger than us, which is to support the government, starting with Nigeria and across Africa, to bridge the huge infrastructure deficits that we see in the country today. Depending on statistics and numbers that you're looking at, we've seen that on the average, Nigeria needs about $150 billion annually over the next 20 years to bridge the infrastructure deficit that we see in our country. The government budget of 2024 puts capital expenditure at about 7.2 trillion. Last year was 7.9, this year is 7.2. It tells you one thing: the government alone cannot even scratch the surface when it comes to bridging the huge infrastructure deficit that we see in Nigeria. It's going to require us, private sector players like ourselves, who are forward-thinking, to come together to find innovative ways to support and complement the effort of government in solving that challenge. So for us, it's all about creating two things. One, help you find alternative, attractive investment class where you can invest and an attractive return that allows you to preserve the value and outperform inflation in Nigeria, and also, contribute to something that is fundamental, that touch everyday life of Nigerians and Africans. So we launched Coronation Infrastructure Fund. Go to the next slide, please. I hope I'm saying the right slide. It's a 200 billion naira, go back. It's a 200 billion naira program, which we essentially intend to raise over the next 2 to 3 years. We're starting with a series 1 of 20 billion. The fund primarily would invest across 6 sectors in Nigeria. These sectors, we've termed them the trust sectors. They are telecoms and telecoms infrastructure. They are real estates, utilities. Within utilities, we will focus especially on waste and waste infrastructure. We'll focus on water infrastructure. We would invest in utilities. We're going to invest in hospital social infrastructure, and then we're going to invest in energy. Now, these are sectors that we've carefully picked and we've selected because of their strategic importance to the economy, and also because of some of the growth that we've seen in these sectors, and then more importantly, the prospects that these sectors hold. So for example, if you look at the telecom sector and you look at what has happened over the last 20 years since the deregulation in 2001, you've seen how that sector has grown remarkably and are now contributing about 14-15% to the GDP. But we also know that as much as that sector has grown, there's still significant growth that can be achieved in that sector. We still have one of the lowest internet penetration in the world. Our data center is one of the smallest in Africa. To give you context, I think the total data center capacity in Nigeria is about 25 megawatts, whereas in South Africa, that is less than half of the population of Nigeria, the data center capacity is around 200 megawatts. So these are huge space that we want to play in, and because we think that there's unique growth prospects. And then if you look at the real estate sector as well, the housing deficit that you see across Nigeria, and some of the policy initiatives that we're seeing that support fundamental growth to come in that sector. A year ago, about 18 months ago, PENCOM, which is a regulator for the pension industry, came up with a policy that now allow you, if you're an RSA holder, retirement savings holder, to tap into that RSA up to 25%, add it to your mortgage to be able to buy houses. We think that has the capacity to galvanize housing development in Nigeria going forward. And we want to be in a position to finance and provide a lot of construction financing in that space across utilities, whether you're looking at the utility sector or you're looking at social infrastructure. I'll give you statistics that in Africa today, there are about 500 million people who don't have access to clean water. It sounds like the data is not real, but it's actually out there. Across Africa, in Lagos, in Abuja, all over Nigeria, wherever you go, there's a need to provide water infrastructure to take clean water to people. We want to be at the forefront of being able to provide the kind of financing that is required in that space. And whether you're looking at transportation sector, as the world gradually tries to decarbonize, we're going to see a lot of activities around electric vehicles. We're going to see a lot of activities within that space. We want to be at the forefront of being able to provide the kind of financing that we need to move our economy forward, not just moving it forward, but moving it in the right direction in which the world is going, which is decarbonization. And that takes us to the last sector we're actively looking at, which is the energy sector. There's a lot that has happened in that space. There's a lot that's going to happen over the next few years around renewable, around mini grid. One of the acts that was signed into the first act that was signed into law by this new administration is acts that now allow states to be able to generate their own power and sell under a willing buyer, willing seller structure. Again, we want to be at the forefront of being able to provide this kind of finances. So you would agree with me that all of these sectors that we're looking at are sectors that represent strategic interest to the government, are sectors that have seen remarkable growth. But we also think that given our natural resources, given the population size, given where Nigeria wants to go, these sectors need significant investment, not just from the government, but as well as private sector like ourselves, to come in, find the right transaction, find bankable transactions, structure the transactions in a way that are able to ensure that we earn our return on those investments, but contribute meaningfully to the society or areas where they are instituted. Next slide. I just want to be sure I'm following. I can't see the presentation. I'm not able to. 1 second. I'm not able to see the presentation. Let me see where it is so that I can speak to. Okay, somebody. Okay, so. Okay, thank you very much. Again, to put this in context for you, the theme of the message is capitalizing on inflation-resilient investment prospects. What we really want to help you fight is inflation. How you store your value is how well you're able to beat inflation. And we think one of the ways to look at this is to have a long-term view and see over the next 10 years, how would inflation perform? Over the last 10 years, how has inflation performed? So we have a chart here that we're showing you. At the top there, you're seeing 3 charts. The black chart that you see there is essentially how inflation has behaved over the last 10 years, from 2015 to about 2022. And then the blue chart that you see right there is a 10-year FGN yield. So if you are taking your money 10 years ago and you had invested your money in buying a 10-year FGN bond, this is how you would have performed relative to inflation. You will have seen that there are certain periods where inflation will beat your return, and in some years where you would beat inflation. However, with our infrastructure fund and what we're promising our investor, at a minimum of 4% premium to the yield of a 10-year FGN bond, you will see how well you significantly in that period had performed inflation. Indeed, and I have to admit that in the later years, so if you look at 2021 and 2022, and perhaps you look at 2023 and what has happened over the last few months, where we've been in a high inflationary environment. That is because of some of the recent policy initiative of the government, like the fuel subsidy removal, like the devaluation that we've seen. But we think that these are short-term issues that government is working aggressively to address. We think, and what we've seen based on the data, the market research that we have, is that inflation over the next few years is actually going to normalize. And you will see inflation trading above the 10% to 15% range over the next 10 years. So if you want to invest in an investment class that protects your money, allows you to outperform inflation over a long period of time, in a way that in 10 years' time, you're able to look back and significantly earn a return that ensures that your value of the investment is not eroded, then long-term investment class like the infrastructure fund is what you should be looking at. But not beyond that, we think that there are also certain things that support growth in Nigeria, that support our growth prospects. Right now, we have our population at about 220 million. The average age is around 18 years. We see forecasts that says that that our population will continue to grow, and by 2040, we will be the third most populous country in the world. That represents a significant labor market. It more importantly represents a significant market for any investor who comes into Nigeria right now and invests in any of this infrastructure class that we're talking about. And then you also look on the average of our GDP growth rate that has been forecasted to grow over the next 3 years. We think with some of the policies that the government is putting in place, all of these things will begin to take shape, and our expectation is that at the very minimum, we're going to achieve some of these projections that are put together not just by Bureau of Statistics, but by the World Bank and the IMF. So all of the data supports the need for people who have long-term view, who are willing to play the long-term game, to invest in a long-term infrastructure fund like the one that we're putting forward. So if your objective is to not just outperform the market in the short term, but you want to preserve the value of your investment, then you've got to look at alternative attractive investment class like the infrastructure fund, which is what we're putting forward in front of you. Next slide. Okay. Then the question is, why Coronation Infrastructure Fund? What essentially are you selling that gives me the comfort to invest with you? We think that there are a number of things. One is our infrastructure fund is going to invest strictly in long-lived assets backed by predictable and highly resilient cash flows. So across these sectors, we're going to be looking for, and we have some of the transactions that have predictable cash flows. They are backed by long-term contracts that we see and we verify after an extensive due diligence process. They are backed by contracts that hedge inflation in the form of escalations built into those contracts. We will be financing projects across both the greenfield and the brownfield. What that means is essentially we'll finance projects that are starting from scratch. We would finance projects that are already existing, finance projects where we have very strong understanding of the business model, where we understand and we've seen the track record of the promoters, people who have done similar things, who are now looking to either expand or grow into a new sector. Those are the kind of transactions that we would be investing in. One of the things that we've also done is to develop a very robust risk management framework where we look at every aspect of a project or an asset before we invest in them. So for all of our investments, it's a rigorous investment process that sometimes take up to 6 months, where we carry out an extensive due diligence, working with independent consultants across the legal, across the financial, commercial, technical aspects of all of our investment. Because we're investing long-term, we would be taking the risks that are similar to what the shareholders will take. What that means is that we spend an enormous amount of time trying to understand the risk that are inherent across every aspect of that project. It allows us to be able to plan, develop the risk mitigation, and then prioritize how we deal with those risks. And where we think that we're not comfortable with those risks, we will not invest in it. This gives you the confidence that we know what we're doing. And when I talk about our investment committee and the structure of the fund, you better appreciate the level of risk management framework that we deploy into any of our investments. So you can be rest assured that if you invest with us, we will bring our experience, our expertise, not just as a fund manager, but also as infrastructure investors that has been doing this over the years, to bear in how we manage your funds, how we find the kind of transactions that we invest in, how we appraise those transactions, and how we invest in those transactions. And then more importantly is we'll be investing across 6 or maybe even more sectors. The reason for that is that we want to be able to diversify our risk and our investments. So perhaps we invest in a sector today that's performing well, and further down the line, for some issues that are beyond our control, we see that things are going south in those sectors. Because we're diversifying across different sectors, overall, we expect that our portfolios will still continue to perform reasonably well, and we'll be in a position to pay you the returns that we promise you at the time that we promise you. Now, the infrastructure fund is primarily a debt fund. It means essentially that our investments in these portfolio companies will be in the form of debt. It would be in most cases senior debt, where we invest and we sit on top of the cash waterfall, and we have first ranking charge over all the securities and the assets that we invest in. But in some cases, we would also invest in mezzanine type financing. For the benefit of those on the call, a mezzanine type financing is an investment that has a blend of equity as well as a blend of debt in it. That is because like I said earlier, we would be investing in these transactions in a way that make them bankable. So we take assets, we look at it, we structure the financing in a way that guarantees our return, but more importantly, that allow the business to be able to expand and to grow. We don't just want to invest and take our money and go. We want to partner with our investing companies to allow them to go. So our financing structure will depend on the kind of transactions that we'll invest in. Now, one of the things that we've been doing over the last 1 year is actually actively looking for the right partners to work with. We understand that in the game of investment, having the right partners in terms of looking for the right transactions to invest in, the bankable transactions to invest in terms of co-investing, in terms of credit enhancement, would go a long way to ensure a successful investment. So we've partnered with some of the leading institutions, both in Nigeria and regionally, such as InfraCredit. We're in active engagement with AFDB, Afrexim, NSIA, and some of the local banks. For us, and I probably should have said this earlier, the Series 1 will focus heavily on investing in Nigeria, but our aspiration is Pan-African. Over time, we want to be able to invest not just in Nigeria, but sub-Saharan Africa. And we think for us to be able to do that, our strategic relationship should go beyond the local level to the regional level. And that's why we are actively engaging these strategic partners to be able to take our investments to the regional level. Next slide. Now, what is the structure of the fund? The fund manager is Coronation Asset Management. And then you have the fund sitting in the pink color in between. The investors, yourself, if you decide to invest, will sit on top of the black box that you see up there. And then the fund has two sets of governing bodies. One is an investment committee. I'll talk about that in the next slide. The investment committee primarily, the job of the investment committee is to ensure that the fund is investing in the right manner. We're looking for the right transactions and we're investing in the right manner. And we are actively carrying out the right due diligence and have the right mitigations in place to ensure that we don't make any bad. And then you have an advisory body that will be made up of the trustee that you see down there. Now, the trustee will represent your interests. They will sit on the advisory board. The job of the advisory board primarily is conflict of interest management, but also to provide oversight for the governance of the fund. You have the advisory body made up of the trustee, made up of the fund manager, Coronation Asset Management, and investors who invest at least 2 billion and above will sit on that advisory body. Now, we've appointed independent parties as a custodian. So there's a separate entity, Access Bank, that is the custodian, and you have Stanbic IBTC as the trustee representing your interests, the unit holders and the investors in the fund. And then you have the portfolio assets that the fund would invest in. Touching briefly on that, I should say that today we have investments across about 4 or 5 sectors that are ready. We've gone through a due diligence framework and we're in a position to invest as quickly as possible in these sectors. We have a transaction in the transportation sector. We have a transaction in the telecom sector. We're looking at the social infrastructure investments, and we're looking at energy investment, both in Nigeria, both in Lagos, in the north, and in the eastern part of Nigeria. So actively, we have a portfolio that is looking across the different sectors. Our objective is to invest in infrastructure projects, not just in the commercial nerve centers of Nigeria, Lagos, Abuja, Port Harcourt, but everywhere where we think that the project is bankable, we think that the project is solving real life issues in the communities that they are situated. Next slide. So this just gives you, I won't spend too much time on this. By the way, we will make this presentation available to interested party after this call. Please drop your email and then we will send the presentation to you so that you can at your own time go through it actively. But this gives you a broader overview of the subsectors within those 6 big sectors that we'll be investing in, the subsectors that would actually be looking at. It gives you a sense that we have a very broad range of subsectors and sectors within those big sectors that we will be looking at. The reason for this is that it is up to us to define the definition of infrastructure. As long as you're providing services to a large base of people, last mile customers, and is solving real life problem in the communities where they are, That for us is infrastructure. So we try as much as possible to broaden the definition of infrastructure within those 6 sectors of priority. But like I said, we won't bore you with this. We'll share the presentation with you, and more than happy for you to go through it at your own time. Next slide. So the next question you probably ask is, so who are the investment committee members? Who are those people tasked with the mandate of reviewing the transactions, ensuring that we're carrying out the right risk framework, ensuring that we're investing in the right manner? So we have a 6-man investment committee chaired by Mr. Rotimi Oyekomi. Mr. Rotimi Oyekomi is one of the most accomplished investment managers, private equity experts in Nigeria. He has over 33 years of experience. He's an independent member of the fund. As a fund chairman, is currently a partner at Apis Partner. Apis Partner is a global private equity firm investing across emerging economies. And then you have Mr. Kolapo Joseph, who is currently the Chief Corporate Finance and Development Officer at North South Power. North South Power is a concessionaire for the Shiroro Dam. But before then, Mr. Kolapo was Director of Project Finance at United Capital PLC. In his capacity as Director of Project Finance, he led and financed over $1 billion of infrastructure projects in Nigeria. And then you have Mr. Tony Atta, who until recently was CEO of Nigeria Liquefied Natural Gas, where in that capacity he was involved in gas infrastructure projects in excess of $30 billion. And then you have Mr. Kayode Akindele, who is a co-founder of TIA Capital. It's a UK registered credit fund that invests in emerging economies. And then you have representing the fund manager, Agbobiozi Aiki Mokwede, who is the CEO of Coronation Asset Management, and myself, Oladile Akinjo, the head of the infrastructure fund. Personally, I have over 13 years of experience investing in infrastructure projects across Africa. Before joining Coronation, I was head of financial planning at American Towers, a global telecom infrastructure company present in over 50 countries across the world. Before then, I have been involved in raising and financing infrastructure projects in excess of $1 billion over the last 13 years. So you can be rest assured that you have an investment committee who collectively have over 100 years of experience in financial services and private equity and infrastructure financing. That experience is what we're going to bring to bear in how we manage your fund if you decide to invest with us. Next slide. So this just gives a very broad overview of the terms of the fund. So like we said, it's a 200 billion infrastructure fund. The first series is 20 billion. The fund life, the series 1 fund life is 10 years, which means that the series 1 will be 10 years. It would invest primarily, like I said, in Nigeria. However, where and if we find opportunities that are unique in other African markets, we would actively consider it. What we're promising you as our investor is to guarantee at least 3 to 4% premium to the yield of a 10-year FGN bond. Today, the yield of a 10-year FGN bond is around 20%. So essentially, what we're saying is that we would pay you about 23 to 24% on a semi-annual basis every 6 months. Every 6 months, you would get your coupon or your return every 6 months over 10 years. However, I should mention that the 10-year FGN bond is listed, which means that the yield trades, the bond trades every day. So the yield would continually change. To give context to that, over the last 10 years, the average yield has been somewhere around 14-15%. The yield has crept up right now because of some of the monetary policies that government has put in place as they try to control inflation and mop up cash from the economy. That's why the yield is elevated. So that rate fluctuates. But every time, what we're promising you is that you will get 3 to 4% premium to whatever that rate is. So you would always be at least 3 to 4% better off than investing in a 10-year FGN bond. However, that is not all. In addition to that, the fund is going to make profit distribution to investors up to 85% of whatever profit that the fund makes. Every year, we will distribute 85% of it back to you, the investors. So comfortably today, you could very well be in a position where you're earning 25, 26% on your return. On one side, you're earning 24%, which is 4% plus 20% yield that's currently in the market, plus excess distribution that the fund is going to make. If that is not clear, please put your question in the chat box. I'm going to respond to it. Again, I just wanted to explain so that it's clear. You understand what the return will look like and how you would be getting paid your return. I should also mention that even though it's a 10-year fund, the fund is going to be listed on 2 exchanges. First, we will list it on FMDQ. Then secondly, we're going to list it on NGX. The reason for that is we know that a lot of individual investors cannot invest and lock that investment for 10 years. You at some point, for one reason or the other, can need your money anytime. By listing it on the exchanges, we create a secondary market opportunity for you to exit at any point in time. Or if you choose to even buy more at any point in time. The fund is a close-ended fund, which means that we're going to close the Series 1 on the 9th of April. However, further down the line, if you decide to buy more, as long as it's available to buy once we list it, you'll be able to buy in the secondary market, or you would be able to sell. So if you're worried about the tenor and locking in your investment for 10 years, you shouldn't. We've thought about that for you, and that's why we're going to list it on the exchange. We're going to start first with FMDQ, and then we're going to list on NGS. What that does primarily is create that secondary market opportunity for you. As the fund manager, Coronation Asset Management is also available to work very closely with you to be able to find investors if you're ready to exit the fund at any point in time. So you would see that even though we're telling you it's a 10-year, you actually have an opportunity or a window to exit at any time that you want to exit. Our expectation is that before the end of the year, we're going to list it on NGX first, and then we will list it on, we're going to list it first on FMDQ, and then we will list it on NGX. The fund has been open since the 11th of March and is closing on the 9th of April. I should mention that you fill the form and then you make your investment. The earlier the better in the event of oversubscription, so that you can lock in your position as quickly as possible. I think those are the key things that I want to touch on this slide. Is there any other? Yes. 1 second. Okay, great. Yes. So primarily, I will summarize this slide. There is a commitment form that is available that we're going to circulate across for you to fill. We would also share the prospectus, which gives you a broader understanding and information about who we are as a fund manager, what our track record is, what the fund is all about, what we're doing. We will share that with you. Once you indicate your interest to invest, we're also more than happy to provide you with some other additional confidential information that again gives you the ability to make the right decision that you want to make on this. The minimum investment is 10 million and the multiples of 5 million naira thereafter. So the entry point is actually not high. Although I expect that given the kind of return that we're promising, if your objective long term is to outperform the market, you should be thinking about investing more than the minimum subscription value. I think that's it. Have I touched on? Is that everything on the slide? Okay, thanks. And then I'll just, you can munch it if you want, or screenshot the screen. These are the contact numbers. You have the contact of the fund manager, Coronation Asset Management, and our advisors, Coronation Merchant Bank, FCMB Capital Market, and Stanbic IBTC Capital. That's it. I think now we'll take questions from everyone. Do we have? Okay.
We have a hand that's up.
Someone is asking, what sort of investment will the infrastructure fund invest in that would beat inflation if I'm expecting return in 6 months? That's a great question. Like I said, we have 6 sectors that we would be investing in, from transportation to real estate to utilities to social infrastructure, transportation as well as energy. What we've been doing over the last 1 year, when we started this process of launching this fund, is also prospecting transactions that we would invest in. So we actually have live transactions in our portfolio right now, where we have issued term sheets to the companies that we want to invest in. We're currently going through due diligence. In some cases, we've finished our due diligence and we're going through agreement drafting. Once we finish all of that and the investing company makes what we call condition precedent to disbursement, we would invest in them. Now, I'm more than happy to speak to you offline about these specific transactions, but these are transactions where revenues are already existing in the business. These are transactions that are already existing. Cash flows are already in the business, and immediately would invest. We'll start earning interest income on our investment in those invested companies. So it is that interest income that we intend to distribute back to you in 6 months. So you don't need to worry about. We've been doing that over the last 1 year, which is finding the transactions, doing the due diligence, engaging the prospective companies that we want to invest in. As a matter of fact, these companies are waiting for us to close out on this fundraising so that we can invest as quickly as possible. I hope I answered that question. Then the next question is, ideally, with the 10-year FGA, you'd be taken on the day of distribution on average over a period of time? Thank you very much, Utman, for that great question. That's a great question. Indeed, what we will do every time we want to pay you return, on the day of payment, we would take the average of the last 6 months yield of a 10-year FGN bond plus a premium of 4%, and then we would pay that to you. So let me repeat that so it's clear for non-finance people that are on the call. At every time when we want to, so we said we will pay you coupon every 6 months. On the day or at the time we want to pay the coupon, we will check what has been the yield of a 10-year FGN bond over the last 6 months. We'll take that value, we'll take the average. So if you check over the last 6 months, for example, today yields are about 20%, but the average over the last 6 months, you had all of it, you take all of it, you average it out, and then you had a premium of 4% actually, which is what we're, and that's net that we're promising investors, and then pay you the coupon. So it's the average over the last 6 months. Utman, I hope I answered that question. The next question is, when you say that the fund will pay 5% of made on investment, at what point would there be profit? Is it from year 0? So the way it works is, at the end of a year, at the end of a period, we will calculate how much has the fund made in terms of interest income in the investments that we've made. We will deduct the return that we've promised you, which is the yield plus 4%, and the other costs associated with the fund. What are these other costs? The fund manager's cost, which is for us managing the fund, we earn 1.5%, which is standard across, as a matter of fact, the lower end of what is standard across markets globally. And then there are other costs like regulatory fees that you pay to our regulator, the Securities and Exchange Commission. And then the trustee who are representing your interest. Again, these are all small fees that probably bring the costs beyond what we're paying you to 2%. So once we take out all of those costs, whatever is left will be paid to you as profit, 85% of it. However, so I imagine that will be once every year. However, there could be some period where there's excess profits, whether as a result of strategic exits that we make in any investment, where we then make special distribution to you, the investors, beyond just the profits that we share and the coupon that we pay to you. I hope I answered that question. Okay. Is the investment return fixed over the period of 10 years? No, it is not fixed. And the reason why it is not fixed is because the yield of the FGN bond fluctuates and changes every day. So it is based on that yield performance that we would benchmark your return plus 4%. When we will receive the prospectus, please drop your email in the chat box. The team will circulate to you the information, all the information about the fund, the prospectus, our rating, everything that you need to know about us, as well as a commitment form, so that you can then make your decision. What is the payment frequency for return and capital investment? Payment frequency for return is every 6 months. Every 6 months. Capital investment, I imagine that you mean your principal that you invest will be at the end of the fund life, which is 10 years. However, like I said, the fund will be listed and you can exit in the secondary market. Is the expected return fixed? I think I've answered that. Have you decided to peg the investment return to track 10-year FGM bond yield? A risk premium of 3 to 4% seems low in comparison to a risk-free FGN bond. I don't know if you caught that earlier, but I'd said that this 3 to 4% is actually net, it's not gross. Again, you've got to bear in mind that you don't want to raise expensive money that you find it difficult to invest. We're taking the money so that we can invest in infrastructure project. If our investment is too expensive in the companies that we're investing in because of the cost of fund, because of the cost or the return that we've promised you, it defeats the entire purpose, which is one, being able to support infrastructure development, and more importantly, being able to invest in a manner that allows the investee companies to be able to expand and grow their business. What then happens is if we take money at such a high cost from you, we now start looking for very risky assets to invest in so that we can meet the minimum order rates that we've promised you. So we think this is fair on a net basis to have a 4% margin over 10-year FGN yield. And I should also mention that because we understand that there's risk involved in investing with us relative to a 10-year FGN bond, that's why we'll spend an enormous amount of time trying to ensure that the due diligence that we put into investments is as robust as possible. We work with independent advisors and consultants across every framework of the risk, whether it's legal risk, whether it's financial risk, whether it's commercial risk, whether it's technical risk, and in some cases, the tax implication of our investment, just to ensure that we get it right. Of course, you can't 100% be certain. No one could have modeled or predicted COVID. And then embed in our facility or investment agreement with the investee company clauses that protect us long term. So that's our job, to ensure that these investments are as low risk as much as possible. We're not saying that we will be better off in terms of risk than FGN bond, but we think that we will do a pretty good job on your behalf to find the right transactions to invest for you. Which one is this? Do you provide project preparatory funding to help? No, are you saying in addition to the buy interest payment, there will be dividends from profit annually, or the dividend will take care of profit? I'm saying in addition to it, there can be special distribution. We can't tell you how much that is or when that will be right now, but it is the expectation that there will be special distribution in addition to the profits and the coupon that you would get. Do you provide project preparatory funding to help the risk early stage projects? At this stage, we don't provide early preparatory funding, but like I said, we have a 200 billion naira program. First series is 20 billion. Before the end of the year, we're going to have another series come out where we can then look at things like project preparatory funding for projects that needs funding to reach bankability. However, for all of these projects or assets that we invest in, we also spend an enormous amount of time trying to help them structure it in a way that makes it bankable for us. I hope that answered your question. That's a great question. I'm happy to have offline conversation with you about that. Hello, Dele, can you articulate the key differentiating factors for CIF over other infrastructure funds that may be in the market? So let me be clear. The other infrastructure funds that are in the market and for us coming out is the right way to go. Like I said at the beginning of our presentation, there's an enormous amount of infrastructure deficits in Nigeria. More importantly, there is very limited bankable infrastructure projects that are in Nigeria. For us to move from a place of infrastructure deficit to bridging that space, it will require private sector participation, not just in terms of mobilizing the capital to finance those projects, but also helping to de-risk those kind of projects that we want to finance. So we need more of infrastructure fund managers. We need private equity, more of it to come into Nigeria. We need private sector capital mobilization. We don't have enough. However, for us at Coronation Infrastructure Fund, there are a number of differentiating factors that we have. One is, and I think the MD spoke extensively about the strength of our board and the experience of our board, the robustness of our corporate governance. Today, we manage over 100 billion naira of investors fund. We are rated A by Augusto and GCR. We have 3 public funds today. All of those funds, we rate them individually by Augusto, and they are all rated A. This speaks to the level of our corporate governance, of our experience and track record as A-rated investment manager. That experience, that track record, the robustness of our corporate governance is what we're also going to bring to bear on this infrastructure fund. That's one. Secondly, is I talked about the strategic relationship that we've been building over the last 1 year. We know that over time, as more players come into this space, the ability to find the right transaction, the ability to structure the right transaction is what will differentiate you in the long term. So we've been spending a lot of time trying to create, that credibility, trying to create the kind of relationship and the collaboration that is required to ensure that we are at the forefront of deal origination, transaction origination, and investment. And then I also talk about our investment committee. If you're familiar with the other infrastructure funds in the market, you will know that Coronation, please, can you scroll to the investment committees? Okay, I have the investment committee section. We are the only infrastructure fund manager in the market today that has 3 independent investment committee members, fully independent investment committee members. And the reason for that is we think long term, our ability to be able to make the right decision will depend on the breadth of the experience of the investment managers. These are accomplished individuals who have been in the market collectively for more than 50, 60 years. They've invested across every sectors of the economy. These are the kind of experience that we would bring to bear in this transaction. So these are just some of the, I don't want to let all of the cat out of the bag. I'm happy to have offline conversation, but I think the important thing to mention is there's no competition in the market. The space is not even, we haven't even scratched the surface in terms of being able to mobilize private sector capital, being able to mobilize private sector expertise to complement the government's effort and bridge the infrastructure deficits that we see in the market today. And all of these things that I've spoken to just gives you an idea of the kind of expertise and the level of corporate governance that we're going to bring to bear on the infrastructure fund. How are you able to guarantee return considering positive default risk for an invested company? Additionally, will investment be only debt financing? So I'm going to take this one. So someone is asking, how are you able to guarantee returns considering possible default risk from investee companies? Additionally, will investment in investee company be only debt financing? And then someone else is asking, please confirm if the returns every 6 months is guaranteed. Yes, the return every 6 months is guaranteed. Are you able to guarantee returns considering possible default risk? That's our job. Our job as a fund manager is to ensure that we minimize the risk as much as possible. And that's why I spoke about the level of due diligence that we bring to bear on all of these transactions. And also, I should mention that our deal pipeline today, a lot of it are actually existing business. They're already earning cash flow. We can see the cash in the business. We can see the prospect for growth. So we're not investing and waiting for 2 years or 1 year for the project to be developed before we start earning coupon. Immediately, on a quarterly basis, we would be earning interest income, which is what We'll then distribute back to you. Any other question? What is the tax consideration on the yields of the, so like every other investment, the return will be subject to withholding tax and whatever tax that is applicable. If I lock in investment in FGM bond now at, for instance, 20%, why should I invest in the fund knowing well that situation may change in 5 years, where the instrument can be 15%, which implies 18% inclusive of the premium the fund gives? Okay, I don't know the name of the person that asked that question. You've asked a great question. It's the question that we spend time in our mind trying to find what is the right way, given the time that we're coming out, what is the right way to structure this that benefits you, while it doesn't put us at too much risk of being able to meet the coupon or the return that we're promising you. Like I said, we are currently in a high inflationary environment. We think that, the sustained government efforts will, over the next maybe 12 to 18 months, bring down inflation. Our hope as a country is that is achieved in a faster manner. But what we're confident that we're going to see is that rates as well as yields will stay elevated for a while. As government tries to mop up cash from the system to bring down inflation, yields are going to respond and are going to trend higher. So we decided to adopt a floating rate structure because we want to be in a situation where if the yield of FGM bond goes from 20% to 23% tomorrow, we want you to be able to earn that extra 3%. We don't want you to, because you have locked in at 20%, you can't earn that extra 3%. So if yields go, we've seen that growth at the beginning of this year was 18%. Right now it's 20%. So it means that if you are locked in at 18% and it's fixed, you will lose the extra 2%. And that's why we're giving you a floating rate approach, which means that as rate trends up, you can expect your return to trend up. The downside, like you rightly articulated in your question, is what if yields go down? What if government has now got inflation and all of those things, and then the yields are now maybe 15% plus 3 to 4%, you're now getting 19%. Whereas if you are locked in at some fixed instruments at 19-20%, we understand that risk. Absolutely. As a country, our hope is that cost of funds will come down so that business can expand, inflation can come down, and all of that. That's why we introduced another element to your return. So we're telling you that give us your money today, we would invest it in infrastructure projects and lock at a high rate. We will continue to pay you your yield plus 3 to 4%. However, if we get 2 years down the line, 3 years down the line, yields begin to trend down. But because we had invested your money today at a high rate, that means that the profit of the fund has now gone higher. We will distribute back to you, in addition to that 15% yield plus 3% that you're now getting 18%, we'll now distribute the excess profit back to you, 85% of it, so that on a cumulative basis, you will still be at about 20-something%. Let me put numbers to that. So if let's say we take the money today and all-in return that you're expecting after we had the margin is 23%. Now we've taken your money and we've invested it at, say, 25%. And then 2 years down the line, so there's a 2% margin, right? In addition to paying you your 23%, you expect to get 85% of the 2% spread on that. 2 years down the line, yields have now gone down. And your return has gone from 23% all in to now 20%. But because we've invested your money at 25%, that is not changing. There's now excess 5% spread between what you're getting in coupon and what we've invested. That 5% is profit. After we back out all of our costs, you still have about 3%. We will distribute the excess 3% back to you. So I think you understand the concept of the floating, which is one, if rates go up, you enjoy that benefit. If rates go down through the excess distribution approach and the 85% profit distribution approach, you're still going to get a significant return compared to locking it in today. It's a lot of questions. I think we should take maybe 3 or 4 more, and then, yeah, it would be it will be good to confirm if this is semi-annual. I think we've answered that it's a semi-annual return. Can I, for a 10-year investment, there's no mention of climate change risk for infrastructure, which is the biggest global risk. You mentioned this, but not E and S specifically. I'm more comfortable if they fund a climate risk experts, especially for investment in sub-Saharan Africa. You're right. You're right. That's a great question. I should mention that in our deal pipeline today, we have a transaction that has to do with sustainable transportation. As part of the effort to decarbonize and move to net zero globally, there's a transaction that we're actively looking at around electric vehicles, where we're financing electric mass transit, transit buses, we're financing charging infrastructure. Our expectation is that before the end of the year, by the time we're launching our Series 2, we would actually have a dedicated climate desk where we actively take on climate-related transactions. So we have a big aspiration in that space. Right now, we're still evolving. You have to admit that given our first series, it takes time to get to where we want to go to. But I'm happy to say that for our Series 1, we already have a climate-friendly transaction that solves a big problem of decarbonization for us. Okay. Ike, sorry, you have a question for me? Igos, can you hear me?
Yes, please go ahead. Hold on.
Okay, all right. Can I invest in the fund in a non-Naira denomination and be paid return in the same non-Naira denomination? No. The fund is registered by the Securities and Exchange Commission, and we're bound by the governance around that. It's a Naira fund. What you have to do is to convert your foreign exchange to Naira and invest in the fund. And at the time of distribution, we'll pay you back Naira. Again, it's all about how the kind of views that you take about how the FX market will play out over the long term. If you're not into speculative buying of the FX, then you know very well that rates will continue to trend down. It's better to convert some of your FX earnings, if you can, to Naira and take advantage and ride the wave right now. The chatbot is open to input. Why doesn't the fund have a floor for yields? The absence of a floor might not be helpful for investors' cash flow planning. I think I've explained.
Dele.
On mute.
Can you hear me?
Excuse me. Okay. Sorry.
Can you hear me?
Yes, I can hear you now.
All right, thank you. I think that we might spend all day here if we don't, and we need to. Time is short. We've extended by 12 minutes. Can I ask that we have everyone here has provided their email addresses, so we will respond to everybody. We'll actually respond to everybody the questions that come up, and we'll send a reference response if that is okay.
Yes, that is fine. Thank you. I actually said we'll take one or two more questions, but I think you're spot on. We should please send in your email. We would send the presentation to you. Our contacts are there, so you can reach out to us directly for any additional information. Before I bring the MD back to close for us, I'll just say that, again, we've seen over the last few months how inflation can erode value. So you've got to think about store of value. You've got to look at your investment on a long-term basis. You've got to find attractive investment class to invest in a long time that edge you against inflation. The message that we're preaching here today is that come and invest with us. We have the experience and the expertise to manage your money, ensure that you edge against inflation. But more importantly, you know, we all play a little part in nation building by investing in critical infrastructure assets that affect everyday life, including you and I. We hope you'll join us. We have until 9th of April for you to fill the form and invest in the fund. Thank you very much. I'll bring back the MD of Coronation Asset Management to close out for us.
Thank you, Dele, and thank you to all our potential investors or investees, as the opportunity might arise, for coming into this meeting, into this webinar. You know, Dele took the words out of my mouth. For me, the key thing about investing in infrastructure is the intrinsic value for all of us as members of the citizenry, and our need to grow, do our part in growing the infrastructure, or should I say reducing the infrastructure gap within Nigeria. And I think that I would, let me not use the word implore, but I would like to speak to all of us and explain to us the necessity for it, and ask that you really think deep. This is a very good opportunity for you to win and win. Win for creating value for yourself and win for creating wealth for yourself. And I just implore that we all take the opportunity of this. As promised, we will send to you responses to questions that were asked on this webinar to everyone who has provided their email addresses. And we look forward to hearing from you and keeping in touch with you. Thank you to Dele. Thank you to the team from Coronation Merchant Bank. Thank you to the team from Stanbic Capital and the team from FCMB Capital, as well as the team in Coronation that helped put this together. And thank you, of course, our esteemed guests for attending this webinar.